The Australian Financial Review.
For months, the Financial Review's technology reporter, Amelia McGuire, has been trying to land an interview with Oliver Curtis. The co-founder of Firmus Technologies is at the forefront of the data centre gold rush. He's been doing blockbuster deals with the likes of Nvidia and Blackstone, is planning an IPO, and has never really opened up about his time in jail for insider trading in his early 20s.
I've got one last question about that period, then we can move on.
So when McGuire was finally given the go-ahead last week, she jumped on a plane to Singapore to join Curtis on what turned out to be a 5-hour tour of one of his AI factories.
The opportunity that we've got that's in front of us is so unbelievably great. And the moment, particularly with my background, particularly with the scepticism around the business, Australia bloody loves a tall poppy, right? And, I've been chopped down many times, but this one's going to be much harder to chop down.
Firmus has gone from being completely off the radar at the start of last year to being worth $6 billion, at least on paper. It's undoubtedly the story of the AI boom in Australia, but there are questions around its business model.
I mean, I definitely walked away with the sense that these sorts of chats are really important to him, these tours, in demonstrating to me and to potential investors and anyone else who he walks through that company that they are serious, that they know their staff, and that they are the real deal.
Welcome to The Fin. I'm Lisa Murray. This week, Amelia McGuire gives us the rundown on her interview with Oliver Curtis and discusses with Chanticleer columnist Anthony Macdonald whether Firmus can live up to the hype. It's Friday, March 20.
It takes a certain type of person to succeed, the type that puts in the work when no one's watching, that knows staying informed isn't optional, it's their edge. It's not for everyone. The Australian Financial Review, the daily habit of successful people.
Hi Amelia, hi Ant, thanks for coming on the podcast.
Thanks for having me.
Hello, Lisa.
Before we get to Amelia and talk about this interview she just had in Singapore, Ant, set the scene for us here. Explain the data centre gold rush that's happening in Australia and why Firmus is suddenly the it company of this boom.
Data centres have been around for 20 years, Lisa. They started when server rooms started moving from inside office buildings into these air-conditioned warehouses, and they thought it'd be cheaper to run the servers in the warehouses together at scale. Now, the game changed nearly 10 years ago when we got cloud computing, right? So all of a sudden, companies didn't necessarily have control of all of their data and everything themselves. They could put it up in the cloud and put it inside these even bigger data centres. And that's sort of where we're at today. You get these big data centres run by Amazon, Microsoft and Google, the cloud services providers, who are hosting data for companies and individuals everywhere. But the next leg of the data center story is just unfolding now, and it's AI factories. And they're going to be built to handle the large language models that fuel the generative AI. So your ChatGPT, Google Gemini, Claude, etc., all of those. So they're going to be these data centers that basically just have the large language models inside them, and these large language models just train themselves inside the data center, and then they deal with everyone's questions coming in and send out answers, and it's all done from inside one data center.
Okay.
Now, most of these AI factories are inside the US, where the tech companies are based. However, the US is sort of running out of power. There's a huge scramble going on for data center resources over there. So they're actually looking for other places to take these AI factories. And Australia could be a good host, right? We've got the renewable power potentially to make it happen, which is what these things need. We've got the water, we've got the data center capabilities, and we've got the Five Eyes security status as well. All of that makes us a very attractive destination if we want it. And we've got the world's biggest tech companies who say they're willing to underwrite it. Amazon, Microsoft, Oracle, etc., want to come give us huge amounts of money to have these data centers. We've also got investors like Blackstone and BlackRock who will also invest in getting them up and running. I mean, the technology is there, the industry capability is there. So we're reasonably well placed if we want to play this game.
So where does Firmus come into this?
Firmus is building Australia's first AI factory in Launceston, Tasmania. It's also fitting out an existing data centre in Melbourne as an AI factory. That's underway already. And it's big on this AI factory as a whole new asset class. It was founded by Oliver Curtis and Tim Rosenfield. It used to be a Bitcoin miner back when that was hot, which is quite common among data centre players. It was focused on the cooling technology for the racks of computers that are used in Bitcoin mining. So when data centres became a thing, it pivoted to providing the cooling technology for data centres. And then it evolved into providing the whole package of what happens inside a data centre. So Firmus says its data centres are different, and it's very explicit on this. These things are just bigger, more powerful. They're all about AI tokens. They don't just lease out their data centres to AI companies. They actually provide the space, the chips, the cooling technology, and produce the AI tokens. So AI tokens are a buzzword, Lisa, but they're the industry's attempt to define what a data centre actually does. Basically, they're the compute that's required for ChatGPT or any of the other large language models to do what they do. So we ask ChatGPT a question that gets broken into AI tokens. They run it through the model, and then the answers are sent back. And what they get sent back as, you can break those into AI tokens as well. So these AI tokens are just the compute that's behind a large language model. And these AI tokens are also the way that data centers charge for their services now as well. They look at how many AI tokens the large language models are using, and then they charge customers accordingly. So the big question everyone's asking now, if Australia has enough renewable energy to power the rollout of data centres across the country, could the export of AI tokens be our next iron ore industry? And if that's the case, could Firmus be our next Fortescue?
Amelia, Oliver Curtis has been out there recently talking up Firmus and its prospects, but outside of the business, he's been keeping a relatively low profile. He hasn't really given an in-depth interview about his time in jail and his second coming until now. How did this interview come about, and what was it like following him around one of his AI factories in Singapore?
So Firmus is actually based in Singapore. Curtis, his cousin, and the other co-founder, his ex-brother-in-law, Jonathan Levy, moved out there in about 2019. This interview took months of wrangling to secure. For the past year, there's been really just as many headlines about whether Oliver Curtis is fit to run a public company as there have been about its potential IPO plans or its many lucrative contracts with some of the biggest names in international business, like Nvidia, Meta, etc. And so I flew to Singapore and met Curtis and his cousin, Tim Rosenfield, at their corporate office bright and early on Friday morning. Curtis ended up giving me what turned out to be a 5-hour tour of one of the two Singapore facilities.
What we do is we have a single loop where we're taking the wastewater, which is the condensed water, right? That's the hotter water. Then we've got
And honestly, the only way I can describe it is that it was intense. He's a really frenetic speaker.
This is the most important part of an AI factory. Why? Because
He seems absolutely obsessed with this company.
the Hypercube is a series of CDUs, cooling distribution units.
He sort of jumped around from topic to topic, explaining why, to them, Firmus isn't just any old data center
And you've got to make sure that they are all speaking at the speed of light at the same time.
and knows, seemingly, every layer in minute detail.
So we're a multi-megawatt centralized cooling system.
I mean, I definitely walked away with the sense that these sorts of chats are really important to him, these tours,
I greatly appreciate this chat.
in demonstrating to me and to potential investors and anyone else who he walks through that company that they are serious, that they know their stuff, and that even though they don't necessarily have, 5 years at Google or an engineering degree, that they do fundamentally understand artificial intelligence infrastructure and that they are the real deal. Curtis actually refers to traditional data center players as akin to hotels, where big tech essentially just leases rack space and then does whatever they want inside it. Firmus considers itself to be more like a mine, where not only do they build the physical sites with players like CDC, they also integrate the compute, the cooling, and the energy arms under a software layer which governs it all in one system. And so that's really why Curtis thinks that they differentiate from everyone else in the market.
And part of the reason this company attracted so much attention initially was because of Oliver Curtis. What's his background?
So his father is Nick Curtis, the founder of Linus Earths and a former Macquarie Bank executive. It's fair to say Oliver grew up privileged. I mean, he lived in Mossman in Sydney's Upper North Shore and attended St Ignatius College in Riverview, where he became friends with John Hartman, the son of then famed obstetrician Dr. Keith Hartman. The pair graduated in 2003. After school, Hartman became an equities trader for Orion, which was managing about $7 billion in assets at the time, while Curtis was in corporate finance. And this friendship would become key to Curtis's backstory. The two went on after school to live together in Bondi, living the high life in a beachfront pad, fair to say far beyond the means of a normal 21-year-old. They splashed cash on ski holidays, partying, girls, cars, gambling, and lived far beyond their means as 21-year-olds at the start of their career. It pretty quickly became clear that the pair were profiting from illegal trades.
It was described as the insider trading trial of the decade.
Essentially, Hartman would trade contracts for difference through his personal IG brokering account before he traded Orion shares.
Together, the pair hatched a plan to make big money through insider trading.
It netted him more than $1.4 million.
To take advantage of the rise or the fall in the share price because of Orion's big orders.
Sydney banker Oliver Curtis faces sentencing next week after being convicted of insider trading.
Ultimately, the pair were convicted for multiple counts of insider trading and served time in federal prison. Hartman in Silverwater and then Curtis in Cooma 4 years later.
I was a young individual with, no supervision around me, and I made a mistake. Stupid mistake.
The insider trading happened now more than 20 years ago, but it's one of the most famous cases in Australian corporate history.
It's very important that it's characterised in that way. We're talking 20 years ago.
And it continues to dog the 41-year-old men at the centre of it, despite their best efforts to move on after serving their time.
So Curtis went to jail in June 2016 for a year. Did he talk about that?
He did, but it's fair to say he was far more comfortable talking about the intricacies of liquid cooling. He spoke primarily about how hard that period was on his family.
I don't think there's a hard thing to do in life than to go and kiss your kids goodbye and not know when you're coming back.
It took about 8 years until Curtis was actually sent off to Cooma Correctional. In that time, he got married to PR maven Roxy Jasenko. They had 2 young children. He doesn't really mince words about how harrowing that was.
You've got to pretty quickly understand the lay of the land.
He said everyone in there had access to the newspapers and wall-to-wall television coverage, which did cover the case extensively. I think he was the prison barber in there.
You can't go through the experience that I went through and not emotionally changing an individual.
But he certainly seems to still be held by that time. I think a lot of the general skepticism that 3 relatives could beat the world's hyperscalers into developing transformative AI infrastructure comes from the noise around Curtis's stint in jail.
That's a big responsibility. And the moment, particularly with my background, particularly with the skepticism around the business, Australia bloody loves a tall poppy, right? And
while he doesn't like focusing on it, I think it is pretty core to not only understanding Curtis, but Firmus itself.
But this one's going to be much harder to chop down.
And, he says it comes up in the first 15 minutes of every conversation with an investor, so unpacking it is pretty critical. All the focus on how much family money is involved in this company, to the choice to go to Singapore, and now how it will handle a potential IPO has in some ways been shaped by Curtis himself and his bad choices as a young man.
And Curtis told Amelia that it comes up in every conversation he has, but has this colourful history and his time in jail, his insider trading, has that hindered him in any way in terms of attracting backers?
It must have, Lisa. It just must have made it harder. Like Amelia said, it comes up in the first 15 minutes of every conversation he has with an investor trying to raise money. I mean, his insider trading case, it's the biggest and best known insider trading case in Australia's history. It's very high profile. His wife's very high profile. Oliver Curtis is very high profile. Firmus now is one of those stories where people's reaction to it is no way. Like Oliver Curtis company, Australia's hottest startup, no way. Building an AI factory in Launceston and this thing's worth billions, like no way. Like proprietary cooling technology, Firmus has got it, the others don't, no way. Nvidia's mates? No way. Like, there's just so much about it that makes it hard to believe. And Oliver and Tim Rosenfield have had to talk investors through all of these concerns. And part of it, obviously, is Oliver's history. You know, he got caught insider trading when he was younger, did time in jail, and then sets up this company.
And yet still all the big names are getting involved.
Yeah, so in the background, he and Rosenfield just keep chipping away on the business, on the relationships with Nvidia, the AI companies, investors. And he's had a few breakthroughs. Like, you know, every investor you get, it makes it easier, in theory, to sign up the next one. So they most recently raised $500 million in equity funding in November at a $6 billion valuation, which is huge. But what made it most eye-popping is that it was triple the valuation the company had raised that only a couple of months earlier when Nvidia and Elliston Capital bought in. So where Firmus really hit the headlines, Lisa, was late last year when it announced an agreement worth $4.5 billion with Nvidia and Australia's CDC data centres to get up and running nationwide. The plan involves building some AI factories and fitting out some of CDC's existing data centres at a cost of up to $73.3 billion by the time it's completed. $73.3 billion is huge. It has to be one of Australia's biggest ever capital expenditure projects. Like, this thing wants to spend more than BHP, Rio, Fortescue, Commonwealth Bank, Macquarie, Wesfarmers put together in the next year or two, right? And most of that is the cost of acquiring computers and chips, which ultimately come from Nvidia.
These are such big numbers, Ant. So they're starting with a $4.5 billion commitment, and they're using that money to roll out AI infrastructure across the country worth $73 billion.
Yeah, that's how they think about it. But I mean, the breakthrough moment in my mind came last month when they secured $14 billion in financing from Blackstone, which is a huge private credit loan. Once again, way bigger than any loan BHP or Rio's ever got. You know, more money than we've seen in a private credit deal in Australian history. And that was only possible because Firmus signed up Meta, which owns Facebook, as its first big customer. So John Watson, he's a senior Blackstone managing director. He described Firmus as selling the picks and shovels that would power an enormous increase in demand for AI services. It's kind of funny, Lisa, because Blackstone's no stranger to Australian data centres. It was the group that came in and bought AirTrunk, you might remember, 2 years ago.
Huge deal.
In a deal that valued at $24 billion. Now, that blew our minds at the time. This one is debt, not equity. So Firmus has to repay that $14 billion loan in full in 5 years to Blackstone, which is only possible because Meta's going to be paying a lot to be inside its data center. So we have a situation where Curtis can't even travel to the US because of his criminal record. At the same time, he's doing deals with some of the biggest US companies like Nvidia, Meta, and Blackstone. And as for raising money, he's found enough investors now to back the story, which, if you believe it, it's a really compelling story. And Firmus is planning to list on the ASX this year.
So, Amelia, what did Curtis say about that IPO when you spoke with him and his long-term ambitions for Firmus?
They wouldn't be drawn into sort of any timing discussions or anything like that, but I was actually more interested in why they do seem so desperate to IPO on the ASX specifically. I mean, it's kind of a barren wasteland tech-wise in the past couple of years. I mean, I covered startups. It is very rare to come across a tech company that is interested in an ASX float.
Why would you go public, considering the background? My story is a very small component part of what Firmus is.
In large part because private markets not only flush with cash, but valuations are trending up thanks to the AI boom. In Firmus's case, I mean, as Ant's just run us through, they've got Blackstone, Nvidia, $1 billion valuation, access to equity and debt. Why the rush?
Transparency, access to capital. Again, I come back to that first point, transparency. Right? We've got nothing to hide.
Curtis does seem to have somewhat of an unrequited love with Australia, despite everything. I mean, he was at great pains to explain to me all the different parts of the machinery in the factory that were Australian-made, even though it costs 30 to 40% more.
We are fundamentally an Australian-founded business that's paying Australian taxes, that is creating jobs for Australia. Why would I be on the NASDAQ?
He has said that, you know, the transparency element to going public is actually a draw card for him, not a deterrent. I mean, it may also be true that it is easier for him to list in Australia than it is in the US, given his past criminal conviction. Then there's also the practical reasons that make an IPO attractive. Investors will be able to take some money off the table. The Curtis family owns about 40% of the business once you go through all the relatives and the investors and the co-founders. That's substantial change for them if this company does float at anything close to its current $6 billion valuation.
Yeah, you're right, Amelia. This is a real family-backed business, and they've already started making a bit of money. Our colleagues on the Street Talk column reported this week that Nick Curtis, that's Oliver's dad, was seeking to sell $100 million worth of shares. I think he's already done it. Those shares have traded. They're in the hands of some new wealthy investors, so he's taken a bit of money off the table.
And like everything else in artificial intelligence, this is a hungry business. Every time they build a new AI factory, they need access to capital, which means billions of dollars to buy the chips, lease the data centers, update the software. I also asked him what he would do if the ASX says he can't be a director or run the company. The fact that the ASX has a good character test in terms of who can and can't be a director has come up a lot in media coverage over the past sort of year. He said pretty frankly that
If I'm the right person for the job, I'm the right person for the job. If I'm not the right person for the job, I'm sure the board will find the right person for the job.
he's willing to put the business first and do what's required, even if that does mean stepping down.
Right now, all I'm focused on is making sure we can capture the opportunity as Firmus, not about myself.
But he did bristle a bit at the idea when I put it to him. A successful IPO would be the icing on the cake for Oliver Curtis and his attempts to chase a redemption arc. He would probably find that framing a bit unfair. He's said multiple times that this isn't about redemption or personal ego or money. He says he's not particularly wealth motivated. But the fact remains that a successful IPO would truly be the icing on the cake for him and his attempts to come good after all of that torrid period of negative publicity after his bad behaviour. There still is, though, this big question remaining that after all this deal-making and the hype from all players across the AI hype cycle, I mean, is this story actually real? Are the mechanics of this business sound?
It took late-night breakthroughs, 404s, a coffee machine that stopped working, a co-founder who did too, new code, new investors who said maybe next round, seeing the sector quietly pivot, knowing your idea held true, model trained, model failed, friends backing you, reading the hype, reheating the spaghetti, another round, a working demo, and a first client for this AI developer to believe they might actually have a business. It's not for everyone. The Australian Financial Review, the daily habit of successful people.
We're talking about Firmus Technologies, the Australian company at the forefront of the data centre gold rush. Founded by Oliver Curtis, Firmus has partnered with the world's biggest AI companies and has backing from financial giants. But there are still questions about its business model. And what's the bull case and the bear case for Firmus?
The bull case, Lisa, is that it rolls out these AI factories. There's more and more demand. Australia wants to host the AI companies and their large language models. That Australia builds the renewable energy generation and transmission to make it possible. And like Fortescue became the wildcard in the iron ore boom, Firmus becomes a multi-billion-dollar company, like tens of billions of dollars. You know, Fortescue did it on China's insatiable appetite for Australian iron ore and its willingness to pay more than US $100 a tonne, $200 a tonne, you name it. Like whatever we were selling it for, it would buy it. Firmus sort of has the same tailwinds. It's got these big US tech companies that need to have their large language models somewhere, and they seem to be willing to pay whatever they have to in order to get them a home. The bear case is the complete opposite. This AI ecosystem is a Ponzi scheme, that these AI companies, OpenAI, Nvidia, Firmus, etc., are just doing deals with each other and feathering each other's nests to get generative AI and the infrastructure behind it off the ground, and it's just not sustainable. The worry is that the numbers these companies are talking about, including Firmus, are unprecedented. It's possible now because Meta, Microsoft, Amazon, Google, the biggest companies in the world with billions of dollars of free cash flow every year, are reinvesting everything they possibly can into AI, seeing it as an arms race. And there's a risk one day they wake up and have to rein in the spending. Firms could also end up with too much debt, not enough power. You know, Australia's transition to renewable energy is really only crawling and is not certain there'll be enough renewable energy to switch off the coal-fired power stations just for what we use today, Lisa, let alone power these hungry AI factories. And remember, this is all new. The Nvidia chips and computers that Firmus is running, that's all new. No one knows how long they'll last. No one knows if they'll be obsolete in a year or two when Microsoft and Amazon or whoever else releases their own equivalent. No one knows if they're going to be able to function once Meta's done its 5 years in the first AI factory. We just don't know.
So they've also been accused, Lisa, in some media reports of inflating their energy efficiency claims. So data centers measure efficiency through a metric known as PUE, or power usage effectiveness. It's a pretty hard metric to judge because there's no recognized certification body, and most in the industry actually agree that it's not a particularly good way to assess efficiency, including Firmus. But nonetheless, Firmus says its Tasmania operations have a 1.03 PUE, which is pretty groundbreaking. I mean, the global average is 1.5, and companies like Meta and Google on average say that they achieve about 1.2.
So they say their AI factories are just the most efficient.
Yes. And to be fair to them, the fact that Meta has decided to back their offering would indicate that they agree too. But this brings us back, I suppose, to the general skepticism around whether these three co-founders could develop technology without the on-paper pedigree of an engineering degree or deep data center experience. That's the characterization that the three of them really reject. Jonathan Levy is an experienced mathematician. Oliver himself obviously has financial acumen. They aren't technological Luddites by any means, but it's also important to remember that this company isn't just Oliver Curtis. Their CTO, Daniel Kearney, joined in 2024 from AWS because he was so impressed by their Hypercube technology. I got to speak to him too on Friday, where he explained that he actually applied for the job cold after hearing about their Hypercube and seeing its potential. This guy did a PhD specifically on energy efficient liquid cooling for GPUs and was very tenured at AWS, one of the market leaders in the field. I think it's safe to say that he's not only an engineer, but he's one of the brightest minds in liquid cooling. And so he's another person who has decided and is very confident that what Firmus is doing is genuinely novel.
And Amelia, there's been a lot of discussion about whether Australia can be a data centre superpower, whether AI tokens can be our next great export. How important is the Firmus story to those countrywide ambitions?
I mean, I'd say, Lisa, that it is pretty important. Firmus's Tasmania facility has a lot of eyes on it. I mean, Curtis and Rosenfield have a 24-hour live stream in their Singapore office, which literally watches the tradies erect the factory from Singapore. But it's also true, even if Firmus takes off and becomes an infrastructure giant in its own right, Australia is still yet to work through what its role is in this sort of AI revolution, as it's called. Firmus's choice to focus squarely on the ASX in the event of an IPO means that the market will likely at some point be tied to its success or failure. But in reality, I think it's actually less about Firmus itself and more about government policy and geopolitics.
Depends on what Australia wants. Like, does it want to be an AI token superpower? Does it want to host large language models on Australian shores and have the likes of Anthropic, OpenAI, Meta training their models here? If it does, there will need to be a massive build-out, and Firmus will be very important to that story. I mean, it's already there. It's up and running. It has the technology. It has shown it can get the funding from sources like Blackstone. It can get the chips and the customer contracts. It can do it. But there are issues, right? Power and copyright are the big two. At the moment, the large language model owners cannot train their models on Australian data like they would want to because of our copyright regime. Finding their way through that, which could be some sort of funding or compensation scheme, would be needed to get Anthropic or OpenAI to go all in on Australia. A lot will come down to the Australian government here. I mean, it has a national AI plan, but it's vague. And I'd say it's extremely hesitant and cautious, particularly compared to the US, where Donald Trump is so keen to use AI to fight China, or at least shore up the US's power in relation to China.
Given Australia's ambitions and given Firmus's ambitions, a final question for both of you. Can Firmus live up to the hype? Is this the ultimate redemption story for Oliver Curtis?
I think, honestly, part of the reason he's so keen to float on the ASX specifically is redemption, which he says doesn't come from a place of ego, but I guess the need to show his kids that there's life after mistakes and, you know, the importance of perseverance. But he's quick to say Firmus is at the forefront of cutting-edge infrastructure tech and, you know, it's got the on-paper backers to support as much. It may still seem too good to be true for some, but the fact remains that this startup has managed to attract investment from the world's smartest engineers and financial managers, and I'd say that that itself is a feat. The original cooling tech, where they submerge a GPU in a bath, that proprietary technology which actually involved them chopping up a GPU, submerging it in a bath and just hoping that it would work. That decision is actually what got Firmus a seat at the table in the first place and is actually fully operational across its 2 Singapore facilities. Oliver Curtis could have retreated away from business after jail. His critics would point out, obviously, that he and his family do stand to make, if you believe private valuations, billions of dollars from this company. But I mean, they've still chosen to use their capital to build something which they say is a sustainable answer to data centers instead of passive investing or some other vein. I mean, I think regardless of whether Firmus goes on to become a major infrastructure player or a moment in time, as so many other AI companies will be, I do think he should be entitled to feel some level of redemption, I suppose, if that's the word, in that at the very least, he has shown his kids that there is life after big mistakes, and he probably made the biggest he could.
He's not cured cancer. And I don't think he's ever come out and said sorry for what he and John Hartman got up to 20 years ago. Maybe he will now that he's a public figure, going to be CEO potentially of a big listed company and out talking about it. But there's no doubt he's onto something here. He's got all these big parties around him lining up to make money out of Firmus in some way. Meta as a customer, Blackstone as a financier, Nvidia as a supplier, shareholder, customer, CDC as a landlord. They're all big names. They're the right people. And Firmus is in the right place at the right time. This industry is getting off the ground, Lisa. It's getting off the ground globally. Whether it gets off the ground in Australia or not in full, like we said, it depends on the government. But it is happening. The question for me is, does this also work for Firmus investors? Like Fortescue's been a fantastic investment for its shareholders. It's paid nearly $50 billion in dividends and now has a $63 billion market cap. You know, if you went all in on Fortescue back in the early days, you would be absolutely laughing today. It's a great taxpayer for Australia. It's a big employer. Is Firmus going to be similar? Like, can Firmus create value for others and not just the early backers and the founders, but the other mum and dad shareholders and their superannuation funds for the country, for everyday Australians? That's, for me, that's what really matters. And it's really hard to know that just yet. Firmus is still private. I've been through their past 2 investor presentations. It's pretty limited in what they say about how Firmus makes money and how much money. And that's why an IPO is going to be so interesting. I think Firmus will make money if its cooling technology is as good as it says it is. If it can run this data center for Meta for 5 years, pay off all the debt it borrowed to buy the chips, and the chips are still worth something, then it's going to be cash for shareholders.
Thanks, Ant. Thanks, Amelia.
Thanks, Lisa.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray, with technology reporter Amelia McGuire and Chanticleer columnist Anthony Macdonald joining the podcast today. To hear more insights from Anthony, tune in to the Chanticleer podcast, which is out every Friday. The Fin is produced by Mandy Coulin. Head of audio is Alex Gow. Fiona Buffini is head of premium content, and our theme is by Alex Gow. If you enjoyed this episode, send it to a friend, as it helps others find us. And follow us wherever you get your podcasts. For more stories about markets, business and power, subscribe to the Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.
It took the 4:30am starts, a run, ice bath agony, clear mind clarity, projections that added up, then didn't, the deal on the table, news of regulation changes, the deal slipping away. Urgent school pickup, urgent new projections, the forecast turning, a rival bid landing, a near-perfect pitch. The waiting, the legal papers arriving, and a signed deal for this corporate leader to finally relax. It's not for everyone. The Australian Financial Review, the daily habit of successful people.